and so that we're not always working for our money, that we can be financially free. We want to go ahead and make sure that we're planning for the next generation, and also helping to make sure that our kids are empowered with the knowledge to be financially free.
What's up, family? Listen, this interview we have coming for you right now. It's probably one of the most important interviews that we're probably going to have on our channel.
Oh yeah.
Because it is about finances. Okay, your money got to be right. So we want to make sure that you all hear from our financial advisor. We hope you enjoy this interview.
All right.
Okay. All right. So, hey, Supal, listen, we're very, very happy to have you on the show, man. I want everyone to understand that this is probably one of the most important people in our family because he handles our money. And we don't want to make him mad. It's kind of like you don't want to make your barber mad because they mess with your haircut. Exactly. This is just that important as well. So, Supal, thank you so much for being on the show with us.
Well, it's great to be here, Clarissa. Lee, thank you so much for having me.
And definitely. So, listen, everyone's been asking us. They're like, "Who's this financial advisor you keep bringing up in your videos?" Yeah. So, can you just give people a little bit about who you are, your background?
Yeah, a little bit about me. I'm a private wealth advisor. I've been a financial advisor with Ameriprise Financial for the last 20 years now. And our practice, we work with about 800 different households throughout the country. We manage over 300 million in assets. And what our primary job is to walk life with our clients, to educate and empower you to make smarter decisions around your money.
Right, so then the burning question then is like, what is like a financial advisor then? Like, help people understand like that. Like, what is it?
Yeah, so I have a degree in finance, and I have securities licenses that allow me to go ahead and work with clients to help them to achieve their financial goals. So as you're planning for your financial well-being, we tend to want to save for our financial independence. We want to get to that point where our money is working for us, and so that we're not always working for our money, that we can be financially free. We want to go ahead and make sure that we're planning for the next generation, and also helping to make sure that our kids are empowered with the knowledge to be financially free. And so my job as a financial advisor is to sit down with you, understand what your goals are, where you're at right now, see what areas of life you're working towards, and then see if the actions that you have taken so far are going to put you on track towards achieving those goals. And if not, we develop a game plan to get there. And what we found is that in having that game plan and working with someone that you trust, that is a bulldog for your success, that has your back, it's a game changer in increasing our probability towards achieving all of our goals.
Okay. So, Supal, everyone's heard about financial advising, financial advisors. People talk about it. They throw the terms around. Why do you think people shy away from that?
You know what it is that we as humans want accountability, but then we also don't want to be held accountable. So what exactly. It is that in order for us to, we know in our heart of hearts that in order for us to hit all these goals that we set about, we're going to need an accountability partner, someone who's going to show us the path of least resistance, but then also motivate us and keep us on that path. But sometimes we don't want that. And right. So because of that, we think that we can do it ourselves. We think that there's always tomorrow to go ahead and do that. We procrastinate. So I think inertia, procrastination, thinking that we can do it ourselves are the primary reasons why we end up waiting.
Yeah. And we did for a while until we, got to a low point a couple years back, and we were like, man, we need a financial advisor. And when we came across you with Bill, we were like, man, we definitely gotta meet this guy. And so we have gotten really passionate about just finance and financial advising and budgeting. And we definitely attribute that to you a lot and being held accountable, because we know, like, okay, we may have this big amount coming in, or we may have a question about our retirement. We know who we can go to or who we can run it across. So who needs financial advising? Is it just a certain economic group, or who needs it?
I think financial planning is important for all of us, because if we think about it, money impacts almost every facet of our lives. And it's a key area that we really don't learn about in school. So when we're going through school, no one teaches us that these are all the things that we need to do, know about money. So depending on the stage of life that we're in, we need a financial advisor for different things. So
Right.
if we're right out of school, and we're beginning our work career, we're in the accumulation part of our lives. The younger that we are, the less money we have to save because money compounds over time. And so if we can go ahead and get started saving younger, begin accumulating wealth in our 20s, being that we would have many decades for that money to be able to double multiple times over between our 20s and retirement, we have to save a lot less money. It allows
Right.
us, sometimes at that point, we're also focusing on just cash flow management. We want to buy a home. We want to be able to get our family started. We may need to pay off some debt.
Right.
And with the young accumulators, that's where we work with, is in making sure we have a good job of cash flow management. We know how much we need to save for our goals, that we develop a game plan towards paying off debt. And then later, when we're maybe 10 years away from retirement, our goals will be quite different. Now, retirement is urgent. We don't have
Right.
3 or 4 decades before we retire. It's happening in the next 10
Mm.
years. And we don't
Exactly.
have an error.
Pressure.
The error margin's not there. So for that group of folks, the pre-retirees, I really help them in making sure that they begin adjusting to the lifestyle that they're going to need in retirement, that they're not overspending, that we're managing within our means, that we also have a good risk strategy because retirement is only a decade away. We want to make sure our money is still growing, but we're not taking too much risk the way we may have taken in our younger years. And then that third group of folks are those that are retired. For that group of people, they need to make sure that their retirement lasts for the rest of their lives.
Right.
So depending on where we're at in life, whether we're young accumulators and starting our families, whether we're pre-retirees or whether we're retired, depending on which stage in life we're in, we have a different need in working with a financial advisor. And then if we're a business owner, we've got a whole host of different issues because we have tax
Oh yeah.
planning needs and all of those things to also worry about. So
Mhm.
I think that everyone's a good candidate, someone who's, I feel, is motivated towards achieving their goals, understands the value of accountability, and having a structured approach. That person is an ideal candidate.
Yeah, and that makes sense. So, I guess some people too, they assume that financial advising is going to cost them thousands and thousands of dollars and things like that. And so is it like a certain amount? Like, is there like a barrier for entry? Is there a certain amount of money that you should be making before you get a financial advisor?
That's a good question.
There are many different types of financial advisors. So I'm a fee-based financial advisor. And what I do is I charge a financial planning fee, a minimum fee of $100 a month to work with a client to help build out a financial plan for them. And
Right.
that fee is anywhere between $100 to $250 a month, usually, depending upon the complexity. And so if we're just starting off, it's going to be a relatively low financial planning fee.
Right.
But let's say that we can't afford that fee. There are robo advisors out there that are artificial intelligence driven that, for free, you can build out a rudimentary financial plan. So at the end of the day, I think everybody needs to have some sort of a plan, because if we don't have a plan towards achieving our goals, our probability of success decreases substantially.
Right.
Mm-hmm. Now, so I know you just talked about robo advisors. Is that something that Ameriprise offers?
No, we don't offer robo advisory services. We feel that having that in-person relationship is where the accountability happens. Because I
Yeah.
found that half of my role is guiding and providing the proper areas of how to invest, what to do, what is the tax planning that we need to do. But the other half is the psychology, the leadership aspect.
Oh yeah.
Because life is always in session. We always have different priorities going on. How do I make sure that we're always keeping certain level of priority towards our long-term goals? How do we make
Right.
sure that we're having those disciplined steps? And without that personal relationship, I found that the app just doesn't cut it.
Yeah. That
Yeah.
because it's yeah, managing money, budgeting, planning for financial future. That is like that's a behavior you have to learn that, right? Like you have to learn that. And I don't think that AI it's a learned behavior. You have
Yep.
somebody holding you accountable. And I don't think AI can necessarily change your behavior, so to speak, but it can spit out do X, Y, and Z.
Yep.
You know,
It tell you what you need to do, but it's not going to keep that motivation going.
Yeah,
exactly.
So that's one of the things that's was really important to us at the time was we realized that we had hit a wall of how much we could do on our own. You know, like I have a finance background from managing a budget for a federal government agency, but that's a lot different than managing wealth, managing investments, and managing financial goals. And I had to really start thinking, for my family, it's like, okay, I have a certain goal or lifestyle or a thing that I want to achieve for us. How do I even get there? And it was a blessing to even come across you. And in that, we were listening to a podcast very similar to this one. And it was just like, okay, that person sounds very genuine, very sincere. And I think they have their best interest at heart, So, for everyone who is listening, like it really has made a major difference for us being able to have someone who can give us that expertise, especially with the years of experience in it. I want you to kind of speak a little bit too on the type of clients that you work with, and like I guess where they vary. And I want people to kind of see that you don't have to be a millionaire to use a financial advisor as well. So, what are like occupations or different types of people that you work with?
Yeah, my favorite group of folks to work with are young accumulators. So this is the least revenue generating group, but this is the group where I'm able to have the biggest impact. Because when we go ahead and set the direction of our life trajectory early on in life, it's a game changer. I'm going to use just as a quick analogy. If we start saving from age 18 to age 26, so a quick example, for 9 years, whatever dollar amount, let's say it's $5,000 a year. And at 26, we decide to stop saving. And we just let that money that we've saved for 9 years grow for the next 40. And so at 65, that money that we saved from age 19 to 26 for 9 years, we take a look at how much it is, and it's grown at 8% a year over all those 49 years. Option two is that we don't save anything from age 19 to 26, but at age 26, we start saving until age 65. We save 5,000 a year. Whatever we save for the 9 years, we save the same amount, but for 40 years. Because we started 9 years later, if we got the same investment rate of return, we would have had less money if we saved for 40 years than if we just saved for 9. The power of timing and the power of starting early supersedes just about everything else.
Yep.
We have to save so little because money doubles if we're aggressive every 8 to 9 years. So if we add one more doubling cycle, it's going to double off of a much larger amount. And so if we just start a few years later, then we're missing out on a doubling cycle. So many young accumulators say, I got to start my family. I need to go ahead and pay off this debt. And then I'm going to go ahead and start saving and get an advisor. Right. And then they'll wait until they're 30 or mid 30s before they get started. But we missed out on 1 to 2 doubling cycles by doing that. And so the amount that we have to now save is so much more than if we started with just a small fractional amount younger on. And so the young accumulators are the folks that I love to work with because it's life-changing. And that's where I also love to work with the children of my clients to get them started young while they're in their teens and 20s so they can start saving when they're really young. So that's one of my favorite groups. I love working with, young professionals. So professionals who are business owners, dynamic, looking to grow their businesses, and they've got a good foundation under their belt, and they're now wanting to go ahead and go to that next level. So they've already laid a good foundation for themselves, but they want a little boost to the next level. And that the professionals are folks I really love to work with. Business owners are that third group of folks that ties in with the professionals that I love to work with because there's so many moving parts that a business has. Having a business is like having a baby. We're always on call. We're always responsible. There are no days off.
Right.
And so that means that oftentimes we prioritize ourselves last, and we prioritize our customers, our business, everything first. And I have seen so many times successful business owners whose businesses are skyrocketing, but they don't have the capital to show for it. Or suddenly they've accumulated a lot of capital, but they don't know how to put it to work.
Right.
And so every CEO needs a good CFO, a chief financial officer, and that's where what we come in and help. And then for those that are close to retirement or in retirement, now what happens is that when we are young and retirement is 3-4 decades away, it doesn't feel real. There's so many other things that are right in front of our face that are more real. But when we're 10 years or less, or we're already retired, it's real.
Oh
We've
yeah.
had life events to know that we're not invincible. We're not going to be able to keep going forever and ever. At some point, we're going to want to have that flexibility to be able to retire. And I love to work with folks that are in that genre, because what I have found is that it's a serious business to be able to get retire. They know that the urgency is there, and they're deeply engaged. So those young accumulators, because the transformative impact is the best. I love working with professionals and business owners, and then pre-retirees and retirees.
Yeah, it's funny. For us, we kind of came in as the business owners for
Yeah.
you, and you met us. We
Yeah.
were a little bit of a mess there, a little bit. We had some debt, we had some of
Yeah.
everything,
Oh,
and I remember the whole time I just was feeling like, oh man, this guy's gonna, we're gonna get on this call with him. He's gonna look at our financial situation. He's gonna say, yeah, I can't help you. I can't help you at all. And we couldn't have been more wrong. Actually, it's been very very beneficial for us, and with our community, and what we with the people, with our listeners, the people who actually watch us. A lot of our target, or the people that are looking at us, are going to be, they're married people, they're people who are working in technology, and they're business owners. And, because we're all three, right? I'm, married, business, and in tech. What I found though is that a lot of people are kind of breaking into tech, and they're instantly making so much money. They're making six figures. They're making more than they've ever made. They're breaking into these tech sale
Yeah.
roles. And my fear for them, or my
Yeah.
concern for them, is that they're going to get that amount of money, and like you said, not know what to do with it. And a lot of people are coming out of college, or at 18, 19, making more money than most people could never make, right? And they don't know what to do with that money. And they start buying cars, and they start buying purses, and they spend all their money on things that they shouldn't. And it's really important to me, and I think for us in general, that we educate those people on like the importance of, like, you need a financial advisor. Like, you need someone who is in the corner with you saying, hey, like, make this decision instead.
Yeah,
So
no, that's a great
yeah,
point, Lee. The tech workers, it's a unique. We work with a lot of tech worker clientele, and what we find is that our tech worker folks, exactly what you said, incomes are in the six figures. A big part of compensation is company stock.
yeah,
Yeah.
And then some companies have very luxurious 401k matches.
Mhm.
So Google's a good example. They have a $10,000 matching. If you put in 10,000, they'll put in 10,000 into your 401k right off the top of the bat. And
Mhm.
so we want to definitely take advantage of that. And then a lot of companies will have, pretty luxurious restricted stock packages that you get a restricted stock that vests over 3 to 5 years, depending on the company that you're with. And you have to calculate those things that you're going to have to stay with that company, otherwise that the vested stock is going to go away. So
Right.
how do those equity based decisions factor into your planning? And so cash flow management with high income, how to take advantage of all the benefits that these tech companies give employees and take full advantage of that. And then how to also then take advantage of the stock compensation, because a lot of these companies, if they're held for the long term, can have really great growth potential. But I find that employees will get very overweighted into the company that they're working at. So, for example, if we're working at Amazon or if we're working at Apple, what'll happen is that 50% of our stock will be in Amazon or Apple stock, because so much of it is vesting every year. We have to
Right.
have a good strategy to divest that. Otherwise, too much of our eggs are going to be in one basket.
Basket. Yeah.
yeah. Especially in the current climate, you put all those eggs in one basket right now, you're probably really sad.
You're gonna lose your basket.
You lose the basket for sure, for sure. So, with that too, even like during this like real tough economy, with the stock market going down,
Mhm.
do you still think it's a good time for people to start investing with everything being so low?
Every time's a good time to start investing. And what we found is that trying to predict the market from a short-term standpoint It's a fool's errand. So I'll use this year as an example. We've seen a pretty substantial rally this year. The markets are up quite a bit, and we're only 6 weeks into the year, but the S&P 500 is up, almost 10% for the year. The NASDAQ is up over 10%. And going into December of last year, most everyone was saying that the first quarter is going to be really tough. The economy is probably going to contract quite a bit. Stock market may be really weak, and it's going to be the second half, and that's where the growth is really going to be. And it turned out to be the exact opposite. What I have found is that when we go ahead and try to time the market on a short-term basis, we're more often going to be wrong than right. And I'll use an example. If in the last 20 years, 30 days of trading dictated over 100% of all of the returns. If we were not in the markets for 30 days over 20 years, we would have lost money. Now, we just don't know which 30 days are going to be the 30 days that we need to be in the market.
Right.
So just the same way that we own a business or we own a home, we don't buy a house and then sell it a week later and then buy it back 2 weeks after that and then sell it a week after that and then buy it back again. We just own the home because it's our home. Or if we own a business, it's our business. There's going to be tough times. There's going to be great times. There's going to be tough times again. But our business is really valued at how competent is the leadership that's running that company, our business, and how is this company our business going to navigate through this tough time? That's the same way I ask you to look at it when we're owning companies. Is if we're owning Apple or if we're owning Tesla or if we're owning a mutual fund, we're owning that company. There are going to be good days and bad days. But if we trust that the leadership of that company can navigate through whatever times we're going through, and trust that over time that company is going to be more successful, or the sector that we're investing in is going to grow, then that's going to be the primary driver of our success. Now, we are so hardwired to time the market, however, that if we only, like a blind monkey, just invested in the S&P 500 over the last 30 years, bought it, never sold it, and just came back, we would have averaged a 9% a year average annual rate of return. But during that same time, the average investor has averaged a 3% average annual rate of return in a time when the system is rigged for our success. So if we just buy it and we don't take it out, we're going to basically make a lot of money.
Right.
But because so much roller coastering happens in the short term, where every other week we think the world's about to end for a different reason,
right.
time and we keep making reactive decisions.
Right.
So in an environment where the whole system is rigged for our success, we keep failing over and over and over again and underperforming the market by a big amount. And that's because we keep trying to time the market. So long answer short is that it's time in the market that is going to make us the money, not timing the market. So I think that with the weakness that we had last year, yes, there's a great time to start investing because, over the long run, if stocks are down and the economy is still going to do what it's going to do over the next 5-10 years, well, being able to buy something 10-15% cheaper or 30% cheaper is great. And that's the type of environment we're in right now.
Yeah, buy low, sell high.
Yeah. So you guys see here, he doesn't only know about investing. There's other things within his company. There's life insurance and a whole slew of other services that Supul's practice has. So you guys really want to get in where you fit in and get a financial advisor. And for people who say they can't afford it because their budget is tight, I would challenge you to think about where you spend your money. I mean, a simple budget item would be food, right? Coffee, spending money on coffee, Starbucks, Dunkin' Donuts, those little things that you can kind of alter and change to be able to make room for financial advisor. And I challenge you guys to look into that, to be able to set yourself up for you and your family up for success for your financial future.
Yeah, because if you don't do anything, then not gonna see any differences for sure. You're
Exactly.
gonna see a difference there, man.
Absolutely. So, and a couple of those things. It's amazing how in those little things like Dunkin' Donuts or Starbucks,
add
you
up.
spend $300 a month on Starbucks.
Yes.
With a bad amount.
You've been there before.
And so that cash flow deep dive is really critical. I have seen so many times people's incomes just skyrocketing, but they have nothing to show for it because expenses just magically skyrocket too, and we don't even know how. We didn't even intend for that to
I
happen.
don't know what happened. This new
Went
house
into a black hole. Yeah, and that's how I found with people's businesses as well. The business can oftentimes be a black hole for expenditure because business keeps growing, it keeps demanding more and more capital, and then the business has now gone up tenfold, but there's no excess capital left to show for it, and so then the business owner's constantly worried about business commitments because the business doesn't have reserves. So for those of us that are business owners, it's really critical that as we're growing our businesses, we must also grow our business reserves because the business is not going to be just always growing all the time. There's going to be ups and downs. And so if we are bringing on staff and payroll, et cetera, those costs are going to be there as your business fluctuates. You need to build those reserves. So that's an area that I see that we need to really be mindful of around our planning.
Yeah, that makes sense. So, I kind of want to, discuss this a little bit. So, let's say someone at the end of this, they realize, like, hey, you know what? I do want to take control of my finances. I'm tired of being in debt. I do have some goals. If they want to get in touch with you, how can they do that?
Yeah, so a couple ways. One is that your most will call me on my cell phone. My cell phone is area code 951-850-0552. 951-850-0552, and that'll be a great way to get a hold of me. Another way is that you can also email me, and my email is a little bit of a mouthful, so bear with me. It's I'm actually going to go ahead and just
you can actually put it in the notes of the on our description of the channel as well.
Yeah, if that would be great. So if we can just put my email on the description of the channel, that would be wonderful. And then I'm also going to go ahead and just edit my name real quick so that I have my email address written there as well. So you're always welcome to just email me at this address that you see right there below my name. And so either email me or call me at 951-850-0552.
Yeah, and we'll do it even better. We'll also add something in the description, maybe like a little way to kind of get people's information. If you want to click on the link and fill out that Google form, we can get you in touch with them as well. For someone who who goes through that process, what's like their first couple of days look like? Onboarding with you, and what
that's a great question, Lee. So initially, what I'd love to do is that our initial meeting is going to be a discovery meeting. It's about you getting to discover you, learn about where you're at, what some of the goals are, what actions you've taken, and you get a chance to discover me and learn about my team, what we're all about. And then from there, I'll be able to share with you a top level overview of where I see some areas of opportunities for improvement, what you've done well, and give you a broad-based overview of what action steps we should take. And then I'll be able to quote you how much I'll charge you to be able to help you. And then if you decide that, hey, this is we love this, we want to go ahead and proceed forward and have a financial plan, then what we're going to do is we're going to create a financial plan, and we're going to work together on this. So in learning about your goals, learning about the actions that you've taken, me and my team, we're going to go ahead and see where we are at in terms of achieving the goals if you keep doing what you're doing, and what actions we need to take to optimize. And once we've shared that game plan with you, you feel good about it and begin implementing on it, we then will meet with you every 4 months to make sure that we're on track. And as life is in session, life is always going to keep changing. So as you're going through life changes, keep me appraised and we'll update your plan accordingly. And whether it's cash flow management, investment planning, paying off debt, insurance planning, multi-generational wealth planning, we can then help you in all of those areas of planning and budgeting, saving and investing, making sure we have a good job of tax planning in place, and then multi-generational wealth planning and protection planning.
Wow, yeah.
Y'all heard it.
Yeah, they cover everything, So, Super, listen, we want to thank you so much for taking time out of your day to speak to our viewers.
It's wonderful to be here. Thank you so much.
Absolutely.
Yeah,
definitely. We'll get you guys in contact with him, vice versa, and
Yeah. So again, don't sleep on this, girl. Don't sleep on it.
Get you guys
Get
some
your financial advisor.
advising,
Trust me, the
please.
return on investment is there.
Yep.
No pun intended. Thanks a lot.
Take care, folks. Thank you.
Okay.